Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool and Ethereum community. My name is Max. Today is September 6th, and today's episode on the Rocket Pool side is going to talk about price action, RPIP 62, a discussion about LEB4s, and a whole lot more there. And on the Ethereum side, we're going to be talking about a Bankless episode with Max Resnick. We're going to talk about scaling Ethereum L1. We're going to be talking about base, Penpie's hack, and a whole lot more as well. So let's get started.
10, 9, ignition sequence start. 6.
So today, finally, well, not finally, but after a month of holding on, the RPL price hit a new low against the US dollar. And this is a screenshot from a little while ago, a couple of hours ago, where Ramana updated the new all-time low price. It's not really all-time low, it's just all-time low since Atlas went live, and that is the what it looked like. However, in the last few minutes, I actually got a new low. So if we look over here, it was updated just a few minutes ago to $9.47. So this is, like I said, the low price, and not looking good. Of course not. So this is partly because of the wider crypto market going down. Also, the ratio is down bad, but it's not hit a new low yet. But in terms of dollar price, it hit a new low. There's a lot of talk going around that September is the worst month for crypto, and it's just a bad month. And then October will be here, which is historically one of the best months for crypto. But that still means we've got to get through another 20 something days of September. So that probably won't be fun for everyone. But yeah, we, like I said, we just hit a new low price post Atlas of $9.07. Okay, next we've got news of this week's community call. So we actually were able to get Langers on the episode this week with a Kane, and they talked about a whole bunch of things. They talked through the bi-weekly update, but they also spent time talking about the things that are happening in Rocket Pool, like the ETH only validator talk. They talked about the hotfix and where we stand with that, and a lot of other things as well that are happening with Rocket Pool. So if you want, like, it was a quick call. It was only 39 minutes, so give it a listen. It was a good one, and I think you'll enjoy it. Okay, we can spend a few minutes talking about RPIP 62 now, and this is the ETH only validators RPIP that went out 3 days ago. We talked about this on Rocket Fuel already, with how this is going to introduce ETH validators if it passes, of course. And there's still an active discussion that the community can kind of become part of, and that is the discussion. Well, they can discuss all of it, but discussion around whether or not what we should do with the rewards cliff. So this is the idea that for people under 10% in collateral, they can start getting rewards. And an interesting reply came through from Ramana. And Ramana, for those of you who don't know, is the person who designed Rocket Lend. So Ramana said, I would like to explain my vote, including the impact on Rocket Lend, which is not the only factor affecting my vote. So he says, first, ignoring Rocket Lend completely, he says, I'm not convinced that removing the cliff is good for Rocket Pool pre-Saturn. I'm sympathetic to the argument that removing the cliff reduces RPL sell pressure. And then he went on to say that it's obvious that removing the cliff increases the Rocket Pool TVL. I don't believe it's obvious. And then he says, I would say it's unclear whether this that way the effect would be, but I lean in favor of the cliff for now. And then he says on Saturn 1, that's going to be as part of a big expensive work, and I'm supporting the removing of the cliff Saturn. But now he talks about Rocket Lend, and he says Rocket Lend, of course, is a project that would set up like borrowing pools for RPL, where you can go to and get RPL for your node, whether you are an existing node operator or someone who is planning on becoming a new node operator. You could get RPL from there, so you wouldn't have to make it a lot easier an experience for you, basically. And then he says, by removing the cliff, it would reduce demand from potential Rocket Lend borrowers since they no longer have to unlock RPL rewards motivation to want to increase RPL stake. And then he says, however, the size of the effect is not clear. This is what would the Rocket Lend supporting approach look like, i.e., suppose we don't want to remove the cliff and also get Rocket Lend deployed quickly. The main bottleneck is community testing and feedback. He says, in this world, all the ETH only node operators who don't care about RPL still come along. They're essentially unaffected relative to the no cliff world, and they just miss some small RPL rewards. Fully collateralized node operators do better because there's more RPL rewards for them to relative to the no cliff world, and they have enough RPL that they can also earn additional yield. And then he says that on the RPL stack, this is but the most affected group is semi-collateralized node operators who do care about RPL rewards but don't want to take large RPL. This group with Rocket Lend has the option to take more neutral position while on RPL while still unlocking the rewards by borrowing via Rocket Lend. This is the no cliff world. They can still avoid going highly long RPL, but just get smaller rewards. If they want to increase their rewards, they can still use Rocket Lend, but the size of those increases available is dampened by the lack of cliff. This is overall, it's not clear to me which world is best for Rocket Pool, and my reasons earlier for preferring to keep the cliff still hold. And then he says that, why do I care about Rocket Lend? Besides the effect on Rocket Pool TVL, he says he's already sunk a lot of time into building Rocket Lend, and Rocket Lend is actually approved by the GMC to be like a public's good protocol for Rocket Pool, in that the Rocket Lend itself is going to take no protocol fee, and it will just be through GMC funding that will go to Ramana and his team instead of to the users. So he says he thinks that there's three ideas of going forward. One is to abandon the grant that's already been rewarded to Rocket Lend and just abandon the work and just leave it as it is. He says two, like tell the GMC should tell Ramana that instead of having Rocket Lend be ready for release now, have it ready for release for Atlas, which is not for Atlas, for Saturn, which is when its impact will become a little bit more obvious. Or he says the third option is to stop undermining Rocket Lend with the current fast timeline for RPIP 62, or do as much as possible to give it a chance, and see how it adopt and how it increases TVL and node operator adoption before implementing RPIP 62. So that's what Ramana was saying. However, in the Discord, Joshua actually had an interesting reply. So Ramana says, what to do about people who feel betrayed, that removing the cliff would change their rewards, I guess. And maybe the protocol is hostile to newcomers and removing the cliff makes them more welcome. I said, I'm just guessing, but I don't really know what the answer is. And Joshua actually here had a really good answer. And he says, the cliff was a bad design. People thought it would increase RPL value. So if you fall below the cliff, you needed to buy RPL. But at the time, people overlooked that it's more likely to have the opposite effect. If you fall below the cliff, you can exit mini pools to get above the cliff again. It says this doesn't require buying of RPL and makes the protocol shrink. While the PDAO didn't realize it initially, I'd say this flaw has been common knowledge and part of consensus for a while now. I'd argue that people will trust protocol DAO more that is able to recognize a mistake and fix that rather than one that wants to hang on to that mistake. So Ramana actually acknowledged this response from Joshua, and I think he was kind of convinced by it, so much so that he went back to the forum and posted it, saying the best argument for removing the cliff I've seen comes from Joshua on Discord. And he says that I'd like to see pro cliff responses to this get a fuller picture, but maybe this could lead me to change my vote. I would still very much like a clear direction for Rocket Lend as described in my previous messages, and this would be even more important if we decide to go with no cliff ASAP. So I actually implored Ramana on Discord to in trading to reach out to the GMC and talk to the GMC about what the GMC could do to help you in this situation, and then hopefully there'll be some resolution for Ramana, for the GMC, and for the community as a whole. Yeah, that situation is not it's not nice for Ramana, but sadly that's the way that things are going right now. And then I actually had this. Oh, actually, one of the things that was interesting was right after the community call happened, Langers actually came into Discord and gave his position on RPIP 62, and he said, "I've already said I'm in favor of removing the cliff." There was some talk about the top-up buy pressure. Overall, I think this is a significant UX improvement, and for that reason, he thinks it's worth it. So Mav is basically, and Mav of course is the general manager of the team. So I think he kind of speaks for Dave and the team members as well when he says this, is that the team basically is in favor of ETH only validators, but also at the same time removing the cliff for RPL rewards. So that's actually quite interesting feedback there from Langers. Okay, yesterday I was in part of a conversation, and one of the things I realized was that 8 ETH validators, which is what we have right now, LEB8s, were maybe not, as competitive as they should be. And this is considering that Lido CSM is likely to go and start their validators with either 2 ETH or 4 ETH. For finance, you can start a validator with 2 ETH right now. So I asked in the the ETH only thread, I said, have you all thought about switching to LEB4s if the cliff goes away? Lido CSM is potentially starting with 2 ETH validators, and after that 1.5, and I'm scared 8 ETH only would be too high a barrier. How would having LEB4s impact conversion come Saturn? So the idea is like, if people went to LEB4s now, would they still see that there was a benefit to getting out of those LEB4s and into mega pools post Saturn? Like, what would that look like? So Lulo replied by saying that, we might need an audit for that. And then that it might actually delay Saturn, and Val then replied by saying needs a tiny bit of dev and needs an audit, but it's not worth it to delay Saturn. So I didn't really understand, why it might not be worth it to delay Saturn, or what the ideas behind it were. And I said that if we the reason why we could do it with no cliff is because a lot of people think LEB4s and keeping the current bonding style with RPL would mean that you would have 2.8 ETH worth of RPL for every 4 ETH of per validator, which some people thought would be too much. And because of that, if we don't have that requirement anymore, then maybe you could go down to 4 ETH. Val said that he wouldn't trade 1 week of Saturn delays for LEB4s. Then Halulo kind of went back and forth, and we talked about how it might or might not work. And basically, I was being a little bit pushy about it because I wasn't fully understanding, I guess. But we're talking about how much this could help clear the deposit pool, and it would wipe out a whole lot of issues with TVL growth, where we already have node operators, of course, who could then start lifting our ETH demand right now. The deposit pools at 35,000, that would basically be gone overnight, and then we could start getting more TVL in potentially. Like hundreds of thousands of our ETH worth maybe. So then I said, I'd love to get Langers or Kane to give their opinion, and then Halulo tagged Kane, which is fine. Val says, for the record, we talked about it and discarded smaller mini pools as a stepping stone before this thread, in my opinion, primarily because it takes smart contract dev time. It says the stepping stone of smaller pools was my February suggestions as 5 or 6. Update, he said, and these would never be forced exitable without further contract changes. Context has shifted. I hope that we'll be talking about stepping stones in June after voting in tokenomics. So this was, a long time ago, like 3 or 4 months ago, basically, that Val was suggesting that this happens. But then Kane said that, tagging me is fine. He says the current code base already tests for LEB4s, as it was something that was anticipated a long time ago. So here there's line saying, not used in production, this contract only exists to test future functionality and may or not be included in a future Rocket Pool release. and then he says that it wasn't specifically looked at the Houston upgrades, but it's almost equivalent to a parameter change in terms of the effects. This is what I mean by that is that the code to reduce down to 8 would be identical to the code to reduce down to 4. So by auditing the code drop down to 8, in the way the code dropped down to 4 was audited. And then what's really interesting here is that, Noshua started talking about the MEV theft. And I think eventually this morning, what happened was Noshua and Val actually spent a bit more time explaining things to me. And the idea basically against this is that right now, there's no way to upgrade anyone that has a validator onto a forced exitable validator because of the delegate upgrade. Like it's an opt-in, so there's no way to force a person to do that. And then with the 4 ETH validators, it actually becomes much more likely that that person could steal MEV, and it's just not safe enough. Val shared his LEB safety research that he did last year, and he says LEB falls without forced exits are not safe. And then Noshua gives an example saying that, look, if I stole an 8 ETH block 2 months ago, I'd continue to steal MEV for free with 10% commission or 2% commission. It doesn't really matter. It doesn't make a difference. Like, you just end up stealing forever, basically. And then I said, that makes sense, guys. Thank you for entertaining my idea. So we're trying, I guess, to explore different ideas of what can help Rocket Pool in this time. It looks like RPIP 62s is the path that is safest for now, in a sense. If you just count, the actual changes to Rocket Pool itself. But I think, we'll be getting RPIP 62 with ETH-only validators, with node set, with Rocket Lend. It looks like that might be a ways away, sadly. But I'm not sure, maybe it won't be. But before we know it, we'll have Saturn, in 6 to 9 months, which would be really good. Okay, next we're going to talk about a bunch of GMC related things. So here, Schifrin put out the GMC Treasury report, and he says that the GMC had 2 payments came in August. The first one was for 4,500 RPL, and the second one was also for about that much. And he says that in the start of the month, that GMC had 61,259 RPL, and then it had inflows of 9,000 RPL. It had outflows of 10,449 RPL, and it spent some of its inflows buying LUSD at 900 LUSD. So the total outflows were 11,348, and the funds at the end of that period were 58,919. So one of the things that Schifrin explains here, says August was one of the historically largest months for expenses because $125,000 was paid out for the tokenomics rework retro. And then there's a screenshot of all the different people who were paid last month and how much they were paid. And it says you can review all transactions, inflows, and outflows in the treasury sheet. So thank you, Schifrin, for making that information clear to us all. Next, we had this interesting idea that was kind of put forward, and this was from SSJ2, SSJ2 Spartan, saying that Roman Storm legal fundraising, and this was basically about the Roman Storm, who is a Tornado Cash developer, has been arrested, and he's seeking fundraising to pay for legal fees during trial. And there was some information about that, and I said what you could do, and this wasn't me speaking as a GMC member, it was just speaking as a community member, was that you could do a community fundraiser and basically sell a POAP and then maybe ask the GMC to match that funding. And I said this was an idea suggested by Jasper and Envision Trading. I said, you could have a POAP for $50 each, and however much you raise, then the GMC could potentially match that. However, there might be some issues with what kind of payments can be accepted by the fund, and it might be that you have to be KYC'd, so that's a barrier. But also there was talk from Dr. Doofus saying, I'm not sure this is the right thing for GMC funding right now. And Valdorf here as well says that I mostly agree with Doofus here. A cash-strapped protocol looking to grow. I just don't think we're in a position to let it rain for non-Rocket Pool public goods yet. He says, I fully support a part fundraiser promoted to the community and maybe other communities though. So that was that's an interesting discussion that's taking place. I'm not sure what's going to come of that. And we've actually had few interesting grant applications coming in this time, and that is yeah. So after a really quiet month where there were no applications whatsoever, we got one here from Blockworks Research saying that they want to do research and promote it to their audience. Research work about Rocket Pool and promote it to the audience. And they've got this idea of having different flash note articles that are around 1,000 words each. And they've got the first one to go out in October or November, the second one in December or January, and the third in February or March. And they've got different topics, but I guess they could be flexible on what they write about. But the cost of these, they're saying that they want $45,000, so $15,000 per article. And then there's another grant here from Sifrin, not Shifrin, and this is an online education platform where they try to attract developers onto projects and build awareness of different projects. So they've got a whole course that they are imagining to do about Rocket Pool, and different deliverables that they think that they can offer. So one of them is a node infrastructure course, another is a core DeFi course, adding Rocket Pool to that. And then they want to have video content, written content quizzes, and certifications about that. And they are actually asking for $200,000 for that. So they're requesting $200,000. Then we also got another one here. This was from the name of the grant is Rocket Pool Governance Analytics Dashboard, and this is from, I'm not sure who this is from. Their name is not very clear, but they're requesting $50,000 for a governance dashboard. So that came through. And then Shifrin was hinting that there might be another one or two largish grant applications kind of marketing. I think that's really interesting. I think that basically the wider community has realized that the Rocket Pool community has accepted a new roadmap with the tokenomics changes, and it might be that it's time. The outside sources might think that it might be a good time for them to kind of get involved in trying to market Rocket Pool to their audiences. And I guess now it's up to the GMC to decide how cost effective these measures will be, or whether even the timing is right for measures. Okay, moving on to some staking news now. And here we have a new Launchpad community episode, Launchpad episode that came out yesterday. And this one is with Dmitry Gusakov. And you might know Dmitry as the lead of Lido's CSM, the community staking module, and with his blue hair in trading. Of course, he's Hot Topics' favorite blockchain developer. But we actually had Lido developer on Rocket Fuel on Launchpad, and it was actually a really cool chat. Like, I really enjoyed talking to Dimi, and he in the episode, like, he shared his crypto journey. We talked quite a lot about like the Rocket Pool community and what he thought of it, like what his experience of it was like the first time he came into trading and into the Discord, and how that was. But also we talked about a kind of like a symbiotic relationship of sorts between well, I don't know if that's the right term to use actually, but like a fruitful relationship in some ways developing between certain members of Lido like sphere and of the Rocket Pool sphere, and like with other members like Izzy kind of being friendly as well in the Rocket Pool community. But we talked about like criticisms of Lido quite strongly and quite head on with things about like home staking and being demoted, according to Vasily, who's the founder of Lido, co-founder of Lido. We talked about CSM kind of being a way of cannibalizing the home node operator set and kind of shutting down a home solo staking potentially. We also talked about the criticisms about Lido's like idea to not self-limit, their governance issues like that. But overall, then we talked a lot about CSM, what it means, what it does, what Dimi's hopes are for the CSM. And like I said, I think it was a really good chat. I really enjoyed talking to Dimi. He's a really nice guy, and I think people who've watched the episode actually really enjoyed it so far. As well. The feedback I've got on is people enjoyed it so much. So yeah, if you want to learn about Lido CSM, what it is, we talked about how Lido CSM was one of the big catalysts for the last year of Rocket Pool, and since November, about how the new tokenomics pretty much came up as a response to the idea of CSM, and it was like a do or die situation. I'm not going to talk too much about it because I want to leave you all with some things to go on, watch and listen yourselves. But I really recommend giving it a listen. It was an hour and a half, so at 2 times speed, you can listen to it within 45 minutes. I think there'll be a lot in there that you might enjoy. So definitely give it a shot. Okay, moving on to some Ethereum news now, and one of the big things that has had all of crypto Twitter talking about for the last few days is this new episode from Bankless with Max Resnick, who is a researcher with Consensus, I think, at the Special Mechanism Group, as I think that's part of Consensus, and he mostly works on MEV, but he's kind of gotten a little bit notorious on crypto Twitter in the last few weeks because he's been critical of the L2 roadmap and Ethereum scaling via L2. And I listened to the episode, and he had some interesting points about how in the current form the L2s are not good enough. They are not Ethereum because of the way they're set up, with their private sequencers and no decentralization of that stack. And there was then a lot of other points that he made about how the layer ones should still continue developing, with faster block times, with potentially with bigger blocks, with a whole lot of other things as well. And yeah, you can go and listen to the episode. But like I said, this was one of the things that had everyone talking about it. So we had people like Preston Van Loon, Jesse from Base, and a whole lot of others kind of giving their feedback. Let's have a look at some of that feedback and see what people have been saying. So Jesse said that a quick reply to Max, and he says Base has fault proofs enabled and testnet on testnet and is close to having it on mainnet and will be stage 1. After that, we're going to go to stage 2. He says the Base core team is literally authorizing ERC for cross L2 interoperability as neutral while also contributing to superchain interoperability. He says we've been clear from day one that decentralization is P0 for Base, and this is not just my perspective, this is the corporate governance stance led by Brian Armstrong, who's been building towards a decentralized future that increases economic freedom for more than a decade, and will continue to let our actions speak for themselves. And you can see our latest update here, and then there's a link. This is Base is Ethereum. We get a massive amount of value from the decentralized platform of Ethereum, and we build on and we contribute back with core development funding, onboarding millions, hopefully billions of people. And then here, Justin Drake had a response as well, where he kind of explains about how the L2s are set up and how that decentralization of those will actually happen. It's too much for me to read it all out for you. You should go and read it yourselves. It's actually a really nice little post, and a lot of people were actually really happy with the post here from Justin Drake, and he's saying things about like sequencing fees and what they look like and where they go, and all the different ways in which value is going to come back to L1. However, Max Resnick had a response to that about Justin Drake's argument. So there's still back and forth going on over here about who's right and who's wrong, and how the things are developing. But it's a very, very active discussion. And Preston Van Loon, I'm going to finish off with his point. He says the insinuation that a core dev team that works on one L2 and another guy that worked on 4844 that works on another optimistic L2 have captured the Ethereum roadmap is self-serving falsehood. It says the idea of show me the incentives, I'll show you the outcome with regards to frequency revenue ignores the fact that these networks have codified decentralization and Ethereum alignment into their constitutions. If not for this fact, there would be very little sequency revenue, and L2s know this. All legitimate L2s have communicated their intention to reach stage 2, and they're working on it as quickly as possible. Who is saying decentralized sequency is coming next month over and over again. This is Off-Chain Lab says they'll likely be 2025, and their latest roadmap was from 2 weeks ago. Max is making another self-serving falsehood, and he says these aren't just contrarian takes, they're just wrong. Max is putting pressure to deliver on L2s by spreading these falsehoods. It's harmful to Ethereum. So this is just a snippet of the discussion that's taking place. there are people who are in favor of the comments that Max is making. So, if you want to check those out, definitely go and do that. But this is a very active discussion, so definitely go and check it out. I think it's a pretty good one. So yeah, you'll enjoy it. Okay, for those of you who don't know, yesterday there was a Reddit AMA, which is Ask Me Anything, with the Ethereum Foundation researchers, and this took place on Reddit's Ethereum. Now, there was a lot of questions that were answered here, and people have given really good feedback about this AMA. However, I'm just going to talk about this one post that I really enjoyed, and then you can go and give the rest of it a listen, and it kind of ties into what we were just talking about. So here, Altruistic Narwhal says, with layer 2 solutions maturing, is there still a plan to scale Ethereum's layer 1 further? If so, what approaches are being considered? And then Justin Drake replies here, and I really want to read the whole thing out to you guys because it's really, really good. But basically, he talks about how there's going to be snarks, and the layer 1 EVM execution is going to use snarks to scale without limits. And he's saying that with real-time layer 1 EVM snarking, the testers can verify cheap snarks instead of naively re-executing EVM transactions, since these would allow us to increase the gas limit by orders of magnitude without burdening validators. All the heavy EVM execution would happen outside of consensus by specialized nodes. Node operators by entities like searchers, builders, and explorers. Users and consensus participants would have it easy, e.g. running their nodes on phones or watches. And then he goes on to explain what this looks like. He says, besides the vertical scaling benefits from dramatically increasing L1 EVM gas limit, there is opportunity for arbitrary horizontal scaling using EVM in EVM precompile to cheaply verify EVM execution within the EVM. This precompile would allow developers to programmatically spin up new L1 EVM instances, unlocking a supercharged version of the execution sharding where the number of shards is unbounded. So rather than capped at 64 or 1024 shards, instead individual shards are programmable rollups, are known as native rollups. And then here there's some notes that he shares. But if you are interested in reading this and following it, there's some links there as well that you can follow. But what Justin Drake is saying that the EVM, the scaling of the Ethereum layer 1 is going to happen, and this is something that we want to happen. However, it should be noted though that with these things that Justin's mentioning, it seems like they are a bit away, and it might be that we have a few years maybe before these become a reality on mainnet. But with these, that would be really amazing. We got some news out of Switzerland here, and this is Zurich Cantonal Bank, and they are actually launching Bitcoin and Ethereum trading in their product. And this is actually really interesting because Switzerland has, for a long time been known as the world's financial hub. And it might have lost some of that power in recent years, but it's very much was the vanguard historically of financial products and financial markets and the things that I offered in terms of banking. And by big banks in Switzerland now starting to offer a Bitcoin and Ethereum services like trading and others, then this might be a sign to come of other banks around the world in the West, in Europe and in the US, maybe eventually offering these services at the bank level as well. I think that's really interesting. So I thought I'd give it a mention for all, and you could read up on that more if you wanted. Okay, I want to spend a couple of minutes talking about Base. Once again, I feel like I talk about Base all the time on the show, but they're just doing really, really cool things. They actually have a new challenge that they've set for themselves, which is about scaling Base. And they said that we're detailing our plan to achieve 1 megagas and achieve 1 megagas increases each week. So what they're talking about is trying to increase the execution capabilities of the Base sequences by increasing the gas throughput, basically a weekly basis. And they want that to basically happen in perpetuity. And Jesse here kind of shares the ideas. This is our current expectation is that we'll be able to saturate this throughput when we open it up. So this means we'll be at 30 megagas by end of year and 45 megagas by end of quarter 1, 2025. And he says we're very motivated to keep growing L1 data availability to keep up with this demand, and that of course comes in with a blobs increasing potentially. If Ethereum's base is already pretty cheap, is there a need to do so right now? This is the activity, but does it require this much? And Jesse says the on-chain demand is going to 10x, then 100x, then 1000x, faster than people expect. It's not about just serving today's demand, it's also about getting ready for the next viral growth moment and ensuring that users don't immediately hit high fees. So of course, if there's some huge NFT that gets minted on base, fees can spike quite quickly as they hit those limits. But what Jesse's here just saying that before that happens, we want to be in a position where we can lift that. Ryan Berkman's here says Base announced they'll raise ETH L2 scaling gas target every week. This is a huge deal. So he's talking about blob saturation basically, and he says that in Pectra, they want blob capacity increase alongside the PDAS blob architectural change. And he's talking about data availability targets hitting and what that's going to look like. And this is a positive sum environment. And then there's issues around bandwidth and stuff. But he says that I wholeheartedly agree with Base. I'd like to see Pectra include a blob capacity increase alongside PDAS. And he says that I love that we're scaling Ethereum together. So Ethereum needs more blobs ASAP. This is a reasonable, conservative way to ship both PDAS and increase blob capacity Pectra. Like he's asking if that can happen, because that would be really good. However, it's not all roses. And here Chase Wright has a response saying, "Did we learn nothing from Binance Smart Chain?" And the idea is basically that by increasing mega gas so much, like the availability of the crypto network to have so much capabilities and so much throughput, the problem that comes with that is state bloat, and that means that it becomes more and more difficult to manage the size of the network, because it's growing so fast. And this is what happened with Binance Smart Chain, where they hit huge issues with their validators not being able to read the whole chain fast enough, and all the issues that were happening with that. And if Base does this, that he's saying that they need to figure out how to deal with the state growth issue. So that, I guess, will be something that they'll address later potentially. Okay, so in the last episode, I talked about a Penpie post-mortem report. Their hack, and now they have a post-mortem report. And here it says that the incident showed the resulting theft of 11,113 ETH that was stolen from Penpie. And here you can see where it's lost. So the majority of it was lost on Ethereum through the Kelp DAO, lost around 76% of their deposited ETH. Wrapped Swell ETH lost 66%. ST ETH, there was 1,751 of it on Penpie, that was 100% lost. SUSDE from Athena, about 50% of that was lost. And then those were on mainnet. And then on Arbitrum, there was GUSD from Gains, and they lost 10% of their amount. So Penpie actually tried to reach out to the hacker. Before that, Amphor, which was like a second layer on top of Penpie, said the boosted vault suffered a loss of 1,381 ETH, representing 32% of the vault's TVL due to the exploit underlying position on Penpie. So this was like, the Ouroboros that Vitalik was describing a few days ago, with DeFi products built on top of DeFi products kind of looping around themselves. So this was, Penpie is built on Pendle, and then Amphor was built on Penpie, and there was like all these downstream effects where they had their ETH stolen as well. Then the Penpie team was like, "Hey, look, we'll count you as a white hat if you give us the money back, and we'll give you a reward, etc." And that they didn't have any response from the hacker, I believe. So here Penpie then put out an updated statement saying, "Following the recent hack, we're announcing a bounty of up to 10%. So whatever they offered the hacker and the hacker didn't accept, they're now offering to the wider community. and saying that if you can get credible information leading to identification of the exploiter and recovery of the stolen funds, like if you get those funds back, you can get 10% of the crypto. And then they're saying that, get in touch with us in these places. There's email, there's Telegram, and the bounty will be awarded to the individual whose group or whose contribution directly leads to the recovery of the stolen assets. And then upon successful recovery, 10% of the recovered funds will be distributed to the contributors who provided the crucial information, ensuring the mutual benefit of both Penpie and the informant. And that is now a bounty for $2.7 million. So if you are interested in getting that, then the only thing you have to do is go find out who the exploiter was and figure out where to get the $27 million in ETH from them. Okay, Amin here retweeted and kind of talked about this new app here that there was a demo of it shared on Twitter, and this is the Payy app, Payy. And the way it works is it's a private way of sending USDC from one person to another person, and they use like ZK technology and stuff. And here Amin says the Payy network is a private wallet built on the Ethereum Validium rollup that lets you transfer USDC while keeping your activity hidden from the public. It's only a partial privacy solution, as your counterparty can still view the history of the funds you sent, so it's not ideal, but at least the world at large can't see your transaction. This is a fair compromise for now, in my opinion, so that we can make Ethereum-based transactions practical for everyday use. Critically, all operators with the Payy wallet occur directly on your device. All operations occur on your device, ensuring you maintain full control of your funds with no risk of accounts being frozen. One item on my wish list is that Payy migrate using Ethereum's EIP 4844 blob space for data availability, so there can be a full rollup instead of a Validium. I guess the idea that Payy had was, they'd be handling thousands upon thousands of transactions per second, and being a rollup might not be ideal for that. But I think, with if improvements coming to like the execution side of layer 2s and also the data availability with more blobs and PDAS, it would make sense for them to become a proper rollup. But it's actually really cool that this solution exists. And if you want to learn more about it, you can go to the original tweet and check out the walkthrough and give it a watch, because it seems like it's a really cool tool for all of you who are privacy focused out there. Okay, next I want to give a huge shout out to Ethereum Intern, because they've been putting out some really great content, and I think I've given them a shout out on Rocket Fuel before, but I'm doing it again just because their quality of content is seriously high grade. So here they've got a thread about MEV self-defense. So this is what you can do as a user to make sure that your activity on chain isn't impacted by MEV. And there's a nice little thread here with 9 tweets, and they're saying that use CowSwap basically, and places like L2s might give you better ways of avoiding MEV than mainnet. And then there's also MEV blockers you can use, and a whole lot of other tools and how you should be swapping. But there's some really nice information here. I'm sure you know all of it, but the main purpose of highlighting this is that you should follow the Ethereum Intern, not that you should necessarily learn something new from this thread. But there's some other content that they're putting out that is really good, so definitely give them a follow. Okay, Anthony Sassano put out this idea yesterday, and I think that this is a really, really great idea, and I really hope we get to see it. So Anthony is, a no frills kind of news source for Ethereum news, and he shares his own opinion in there as well. And people really trust him for getting to the meat of the content and really sharing high quality Ethereum news. So he says, I've traditionally not done guest episodes on the Daily Gwei for various reasons. I think it's time to change that. He says, I want to shine a spotlight on all of the bullish things that are happening in Ethereum, because I think there's a bit of a void here, and I'll probably start doing it after DevCon. So he will be in Thailand for DevCon. But what Anthony's saying here is that he really wants to start highlighting these projects because there's not enough people doing this. And I think this is a really great idea, and I will definitely be watching every episode that he puts out, whether that's monthly, bi-weekly, or fortnightly, whatever you want to call it, or weekly. And it seems like a whole lot of his audience are excited about this as well. there's a lot of feedback that people are really excited to watch this. I really hope that Anthony does do this, because he will have a lot of people who really value his judgment about Ethereum and crypto, and they'll really love to see these spotlights on Ethereum projects and developments in a really good way. Okay, finally, I'm going to end today's episode with some other news, and this is kind of like a wider crypto market kind of sentiment that's going around right now. And of course, I started this episode with news that the RPL price in the US dollar has hit a new post-Atlas low of $9.50 or thereabouts. And, ETH has been struggling a little bit recently as well in price. They're coming down, and crypto as a whole has kind of retraced a little bit, and the sentiment is just horrible right now. So I wanted to talk about this, and here Cloudred says, suddenly everyone decided to write long-form tweets about why the entire crypto space won't pop like it used to. This is time-based capitulation in full effect. Now, time-based capitulation is this idea that there's two capitulations that have to happen in the market to kind of wash out all the excess that was there from before. And this is like a previous bull run, right? The idea is that you have a price-based capitulation where price falls so much that people are just like done with crypto and they like sell out of their positions. And the second one, the one that's a little bit more difficult to handle for most people, is a time-based capitulation. And this idea is that, you reach a point where you're not seeing the light at the end of the tunnel. You just think that crypto is dead. It's just a slow bleed in sentiment, and you just get more and more worn down. The sentiment of like, I'm tired of crypto. This is too much. Like, just kind of becomes insidious. Like, it becomes a brain virus. And then before you know it, people are just like saying, I'm done with crypto, and they dump. And that's basically a time-based capitulation. We actually saw this happen in 2020 as well, where, right after the 2017, early 2018 peak, by the end of 2018, just 10, 11 months later, 12 months later, the prices capitulated, right? Like ETH went down to $80, BTC went down to 3,000, the prices capitulated. But it wasn't until like a year later where there was this kind of sentiment in market sentiment again, where people were really just down bad, and they felt like the crypto market was dead. It wasn't ever going to come back. And of course, we all know what happened in 2020 and 2021. And I really feel like the sentiment right now is similar to that 2019 sentiment, where people are just unsure of what's going to happen next, and they just want to be done with it. I'm seeing more and more stories now of people who are capitulating their crypto bags, and some of it are, anecdotes from people I know who know people who have capitulated, or people either LARPing that they're capitulating on Twitter. But it seems like that sentiment's kind of growing right now. And DC Investor actually has a nice way of countering it. He says, look, I don't know when we go up. So that's the first thing, right? Like, are we going to go up like soon, next year, maybe like 2 years? Who knows? Like, it depends on how you think the markets are going to go. But what he says is, I just know that I've held through hell and back and hell and back and hell and back again and again. And I simply don't fumble the bag during boring times like these, when everyone's getting angry and anxious and thinks it's over. Now, I think this is totally right. And this one is like, DC Investor's been around crypto for a while, right? Like, he's been through those bear markets, like, in I think he got into crypto in 2014, so he saw the 2015 bear market and the 2018-19 bear market, and now, obviously this the 2022, 2023 bear market, and now the sentiment market as well. And people here are like saying that this feels worse, and it doesn't feel worse. And others are saying, I'm not going to sell, and they're just saying patience is key, patience will be rewarded. And, not financial advice or anything like that, but in all honesty, like I said this on the weekly orbit this week as well, this is the kind of time where instead of looking to dump your bags, you should be looking to add to your bags. And I was saying on the weekly orbit that, if we get these wicks right down, if we get another capitulation wick or some kind of like really, really horrible sentiment matched with like horrible prices, then that isn't a time to sell all your crypto. That's the time when I might be deploying more money to buy more crypto and add to my position. Now, that is, of course, like I said, not financial advice. Please don't listen to me. Like, do your own thing, whatever you want. I'm just telling you what I'm thinking. But I feel like that is actually like a really a really strong sentiment right now that's kind of growing, and I don't understand. And then here, Ignis has some information. He says, current crypto market reminds me of early 2020. It's not in charts, but in the sentiment. And it says, apathy and pessimism dominate, questioning crypto's real world utility beyond speculation, stuck innovation in product and tokenomics, and hopes for institutions are coming. He says, I feel like this is not just crypto Twitter, but also real life talking with old crypto OGs at Korean Block Week. They're disillusioned. Many early crypto adopters are abandoning crypto, and they're doing what like by quitting. He says, but I'm not as pessimistic. And he says, while many OGs quit or get disillusioned, there's a new group, often younger people, who enter the market and bring fresh new ideas for crypto. He says, for example, I've started meeting people like yesterday. I met someone in the early 20s, super optimistic about crypto and Bitcoin ecosystem, especially, and others from Pudgy Penguins. Many more people at Korean Blockchain Week. And he says, in general, I noticed that newer and younger generation is more optimistic and bullish than the old crypto OGs who just need one more cycle to cash out and maybe leave crypto forever. Yet these younger participants are less influential in X, where sentiment is being driven by OGs like Saka and Kobe, etc. And then there's like, this idea of what's next. He says, like in 2020, I believe we're primed for a catalyst to emerge that will invigorate the market and bring optimism and bullishness back. When DeFi summer and the subsequent NFT and metaverse boom started, we believed we had found our product market fit. And we even managed to convince Facebook, leading to their rebrand as Meta. Something will bring the optimism and bullishness into the market. Perhaps the newer and younger generation of crypto builders and community will be the ones to do so, and not the old pessimistic about to retire crypto OGs. I just hope we don't have the 2020 COVID-like crash before we do so. And this time, of course, it might not be the COVID crash, but there's this talk of a recession and yield curve uninverting and how that leads to recession, and how the Fed, have tried to get a soft landing, but how it might be missed. And this is going to be the recession to end all recessions. I literally saw things on crypto Twitter about how this recession that's potentially coming, and they were saying it's going to be worse than the 1929 stock market crash in the USA. And I mean, it might be, but that's the level of doom and gloom that's out there right now. I just wanted to like shine a light on that for you all and let you know that, if you're feeling scared of your positions in crypto right now, please try to be patient. Like, Anthony Sassal and others, like we've echoed that sentiment, is the worst thing you can do in crypto is like fumble your bag. And that means, doing something that would make you lose your crypto, or potentially selling your crypto when right before the bull market comes. And that, of course, is, like I said, not financial advice. Like, you do you, but as someone who's been around a couple of cycles, I kind of have an idea of what things look like, and this really does look like the darkest part of the night before we start seeing light on the horizon. So I'm hoping that there's light on the horizon, and that we start seeing it soon. But don't do something stupid before that happens, because you might regret it for a long time. So anyway, on that note, thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely weekend ahead. And I know I've done a couple of mega episodes this week, and they've not been like my cadence has not been good. But I'm hoping that from next week I'll be back to 5 episodes a week. It's just there's been some stuff happening in my real life that I meant I couldn't record every day. But from Monday everything will be good. So I'll see you all then. Bye.